All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. For a day where the market's moved in about a 20-point range, there really hasn't been much movement. It's been pretty stale out there. We see the VIX falling. We see bonds flat. We do see the U.S. dollar falling. Again, we talked about that reversal yesterday in the U.S. dollar, and we're seeing, follow through here to that today. But for the most part, market just kind of in a little bit of a hold pattern going into the 3-day weekend here in the U.S. for the Memorial Day holiday. So hope you all have some great weekend plans and have a great Memorial Day there. But as we kind of look at the market going into the close, we don't really have much where you can say, well, you know what, the price action we're seeing today is significant of what's going to happen going forward, right? Perhaps in some of the banks, perhaps a little bit bounce, but we talked about the banks and some of the fundamentals here. Does anybody really want to buy them? That could change a little bit. Something like a Bank of America starts filling the gap. This can be kind of a very interesting bottoming pattern where you get this drop in a stock. And let me get rid of the lines. Here we go. But basically what happens, you get this downward move and you get a consolidation, right? And then you get a breakdown of that consolidation. And all right, here's the next leg, right? It's going to be this kind of flag and pennant type pattern. Here we just had our little kind of wedge flag, and down we go for the next move. But no one's left to sell after that move. It's buyers that step in, and this doesn't always happen, but we do see this happen from time to time. We saw it with Bank of America right back here. Got the breakdown. Now this one was a 2-day sell and then quick snapback, but not uncommon to see a quick snapback after that type of price action. It's one where if you're short, the stop point is the close on the day prior to the gap down, right? That's the stop area for it. But we're seeing some of that out there in the market, today, but nothing that's overly significant. Some of the volumes are fairly flat. If you look at things like the bullish percent index, continuing on lower after yesterday, but just slightly. We see oil, gas, energy stocks, really on a bullish percent index standpoint, really getting hit hard this week. Was up here around 60%. It's going to close today around 35%. So that's almost a third of the industry in oil and gas has gone from bullish point and figure charts to bearish point and figure charts. And you can see who they are. You have ConocoPhillips of the world, Chevrons of the world, that just had these real sharp down days yesterday, and pushed on lower. Today another day where we see Chevron outperforming the XLE. We talked about that this week. To me, that is the best energy trade out there. Long Chevron, short XLE, and you don't have to worry about where oil goes. You don't have to worry about where the energy sector goes. You just let Chevron outperform the XLE or the energy sector altogether here. Now, for the 100K challenge, there are no new signals here this afternoon. It's dry. I'll show you the 3-7 crossovers because there's 5 of them out there, but as far as any of them signaling, they are not. So that leaves the challenge here with cash and leaves it with J&J. Now the auto exit date I have 525 here, but that is Saturday, so I'll adjust that here. Should be 528 because of the holiday. So we'll put that in here. For that as the auto exit date on green. Now, if we go and we look at J&J where it sits right now, it's 12-cent move here today. This is this option here has been quite funny. If you want to see how an option moves with implied volatility of the market, and not just with J&J, it's you can watch this J&J option because it's been quite eventful in terms of how it's moved. It's actually had some bigger gains on some red moves than it's had on some green moves in the stock. So. Anyway, when you're at the money and you're just chopping, those things will come into play. So challenge is, a little over 3,600 right here, going into the weekend, about a 20% gain. Looking for more, but as we've talked about, if we're in this kind of grinding, chopping, type of C here, the algorithm isn't designed to, go out and try to trade that. It's designed to survive that and be primed and geared to to grab the trends that come into play. Now, one of the key things that you see ahead of any trend is a crossover of the 3-day and the 7-day moving average, and it is one of the things that the algorithm is built on. Right, and there are some of these crossovers happening today. Some bullish, some bearish. Here's Microsoft. This has the 3-day moving average crossing down below the 7-day moving average, and doing so on an up day. Right, you don't see that very often, but it's not signaling the next trend. We saw yesterday's action. We saw Wednesday's action. Neither of those indicative of the next trend coming, and so just kind of still waiting for some sort of signal. Speaking of waiting, Raytheon has just kind of been in this consolidation, tried to break down, tried to break out, and just kind of stuck in there, but has that downside 3-7 crossover on it here today, but not triggering a signal. Interesting announcement by U.S. President Trump today, sending 1,500 soldiers to the Middle East. With some of the things going on with Iran. So, something worth keeping an eye on. Is it, a major thing for the stock market and some of these defense names? No, but could it be? Sure. If we wake up one morning and all of a sudden there's some, shots fired between the U.S. and Iran in the region, or Iran and anybody else in the region, the S&P will be down 60, 70, 80 points that morning, and these defense stocks will be up 10%. And, that is something where, it doesn't happen very often, but we've seen that happen and play out, several times over the course of the last 30 some odd years here. We also have a 3-7 crossover on gold here to the upside, but is not triggering here today. I thought it had a chance to, but it didn't. Boeing, has the 3-7 crossover on it, but not triggering. This wasn't triggering at its high today either, but has that 3-7 crossover, and same with Home Depot. 3-7 crossover happening, but coming off of a new short-term low, typically isn't where we see a signal come into play. But one thing about Home Depot this week, their earnings weren't fantastic. I don't think you can look at Home Depot's earnings and say, wow, this was amazing. Home Depot's going to be on fire for years to come. I think the story with it is that they're going to continue to have growth, but that growth is going to be slowing. But one thing very clear, very obvious, is you can't own Lowe's. You got to own Home Depot for the sector. And, we have seen investors continue to flee Lowe's and, pile into Home Depot. And, we talked about that kind of combo element here on Wednesday, and that continues to play out here. And I do think we will see that continue to play out, for a long time to come. KB Home isn't on the challenge watch list here, but a nice little 3-7 crossover on it here. Here to the upside. This is something that's been higher lows and higher highs, and has just been an absolute beautiful upward trend, and this is kind of that kind of a little bit of signal of the next next leg higher to come in here for KB Home. So those are some of the crossovers that we're seeing out there that are taking place here in the market. But from a broader market standpoint, this kind of chop really kind of remains. Now this morning, one of you commented to me that this move here in the market has been very different than past moves that we've seen in terms of the choppiness, in terms of this kind of up and down type of move. And I agreed. A comment said, yeah, it definitely is a little bit different, especially if you look over the past year or so. But when you go and you look at summertime in the market, it is a time where some things can get a lot choppier, where you just get these drops and then pop and then drop and pop and drop. Typically during the summer months, we will get one or two kind of really good trends. One to the upside, one to the downside, or two to the downside, two to the upside. But to see a lot of pop and drop is not uncommon during this time of year. Right, during this time of year, and that is one of the more normal type of things, but it doesn't make for looking at the market and going, well, the market's up, so that's super bullish, or the market's down, that's super bearish. Now, it just doesn't. You don't see a lot of days, up days or down days stacked on top of each other in the summertime period historically, and there are exceptions to that, right? And we can come in and we can go. Let's just go back 3 years, right? And we can see there are exceptions to that, but here in 2017, from May through August, you can just see there was a move up right here, there was a move up right here. The rest of it was a lot of chop. Just a heck of a lot of chop there. You can see the summer prior in 2016, there was a lot of chop. Then there was that 3-day drop and big pop, followed by just a absolute, every day. One day's up, next day's down, up, down, coming in here to the market. So that's a norm here during the summer months. It's not something to fall asleep on and say, well, you know what, it's going to be every day and all day, because we do see trends emerge during this time period. But it's one just to kind of keep an understanding of, and that, hey, that is that is more normal than abnormal. All right. Thanks for hopping on. Have yourself a fantastic Memorial Day weekend, and we will talk to you on Tuesday. Take care.